The job description of a management accountant revolves around the analysis, interpretation, and presentation of financial data to help organizations make strategic business decisions. Unlike financial accountants, whose primary focus is on historical financial reporting for external stakeholders, management accountants provide forward-looking insights tailored to internal decision-making processes. Their role is essential in budgeting, forecasting, cost control, performance evaluation, and financial planning within a company. Management accountants play a central role in supporting senior executives and departmental managers by turning raw financial data into actionable insights. They contribute significantly to business strategy by providing cost-benefit analyses, identifying profit improvement opportunities, and advising on pricing strategies or investment decisions. Employed in a variety of sectors, from manufacturing and retail to healthcare and technology, these professionals are vital in aligning financial goals with business objectives. From the outset, the job description of a management accountant emphasizes a dual responsibility: safeguarding financial integrity while driving business performance. This balancing act requires a solid understanding of accounting principles alongside a strong grasp of the business landscape. Management accountants typically work closely with operations, procurement, and human resources departments to ensure that financial data accurately reflects all aspects of the business. By interpreting trends and variances, they guide stakeholders in making informed decisions that improve operational efficiency and profitability. Budgeting, forecasting, and financial planning. One of the most critical responsibilities of a management accountant is preparing budgets and financial forecasts. This includes developing annual budgets in collaboration with department heads, tracking actual performance against targets, and revising projections based on changing business conditions. A management accountant ensures that all departments align with the company's financial goals by monitoring budget adherence and flagging discrepancies. Forecasting involves the use of historical financial data, market trends, and predictive models to estimate future revenues, costs, and cash flows. This proactive approach allows companies to prepare for different scenarios, whether it's a downturn, expansion, or operational shift. Management accountants often use advanced spreadsheet models, financial planning software, and business intelligence tools to support these activities. Their role in financial planning doesn't stop at the creation of reports. It extends to interpreting what the numbers mean for the organization's future. This insight enables better decision-making across areas such as resource allocation, hiring, investment, and product development. Cost management and variance analysis. Effective cost control is another central element in the job description of a management accountant. They conduct detailed cost analyses to understand how money is being spent within the organization and identify opportunities for efficiency improvements. In manufacturing environments, this could involve calculating the cost of raw materials, labor, and overhead to determine the total cost per unit. In service-oriented sectors, it might mean evaluating the cost of delivering services or managing project expenses. Variance analysis is a key tool management accountants use to compare actual results against planned or budgeted figures. By identifying variances, whether favorable or unfavorable, they help explain the reasons behind performance deviations and recommend corrective actions. This continuous monitoring process ensures that the business remains agile and responsive to internal and external changes. Midway through the job description of a management accountant, it becomes clear that their role goes beyond number crunching. They must also communicate complex financial concepts in a clear and understandable way to non-financial stakeholders. Whether it's explaining why expenses exceeded the budget or recommending changes in strategy, management accountants are expected to present data-backed arguments that influence operational and strategic decisions. Performance monitoring and decision support. Management accountants serve as key contributors to performance measurement within an organization. They develop key performance indicators, KPIs, that align with strategic goals, track progress over time, and help managers understand what's driving or hindering results. These KPIs could relate to sales growth, profit margins, cost per unit, or return on investment. They also play a crucial advisory role by supporting critical business decisions. For example, if a company is considering launching a new product or entering a new market, a management accountant will assess the financial viability by conducting a break-even analysis or net present value calculation. Their insights are crucial for weighing the risks and benefits of strategic initiatives. In times of uncertainty or crisis, such as an economic downturn or unexpected cost spike, management accountants are relied upon to provide scenario analyses and contingency plans. Their ability to anticipate potential financial outcomes ensures that the organization is better prepared to navigate volatility. Compliance, internal controls, and reporting. While management accountants primarily focus on internal decision-making, they must also ensure that the financial practices within the organization comply with relevant laws, standards, and internal policies. This includes maintaining accurate records, adhering to ethical standards, and supporting audit processes when required. They are often involved in designing and enforcing internal controls that protect assets, prevent fraud, and ensure the accuracy of financial information. This is particularly important in larger organizations where multiple departments handle financial transactions. Reporting is another core responsibility. Management accountants produce regular internal reports, such as profit and loss statements, cash flow analyses, and department-wise performance summaries, that are tailored to different levels of management. These reports serve as the foundation for board meetings, operational reviews, and strategic planning sessions. Skills, tools, and qualifications. A strong candidate for a management accountant role typically possesses a degree in accounting, finance, business administration, or economics. Many also pursue professional certifications such as Chartered Institute of Management Accountants, CIMA, Certified Management Accountant, CMA, or Association of Chartered Certified Accountants, ACCA, depending on the region. Key skills include analytical thinking, financial modeling, problem solving, and effective communication. Management accountants should be comfortable with software tools such as Microsoft Excel, Enterprise Resource Planning, ERP, systems like SAP or Oracle, and business intelligence platforms like Power BI or Tableau. Attention to detail is vital for accuracy, while a strategic mindset is necessary for long-term financial planning. Time management, collaboration, and adaptability are also important traits, given the fast-paced and cross-functional nature of the role. Conclusion. The job description of a management accountant outlines a role that is both analytical and strategic. These professionals serve as financial advisors within the organization, helping managers make data-driven decisions that enhance efficiency, reduce costs, and improve profitability. By blending financial expertise with business acumen, management accountants provide the insights needed to navigate complexity and drive sustainable growth. Their influence extends across all levels of the organization, making them a valuable asset in shaping the financial health and competitive edge of a business. Through budgeting, forecasting, cost control, and performance analysis, they help turn financial data into a powerful tool for decision-making and long-term success.